Rising population, rapid urban migration, and inconsistencies in government policies are a few factors said to be widening housing deficit in the country. With a workforce that barely gets 30,000 naira as minimum wage, the answer to the question, do you have a house, asked some workers across the country, is the same.
I don't have a house of my own.
No, I don't have house.
Yes and no. Why I said yes and no is because I don't have a house. I've been trying to build one for so many years, but I've not been able to complete it.
According to Jaswile Sendu, a real estate developer, besides the financial implication, the processes involved in acquiring property in the country are too tedious.
I think government should help improve on how people should own their title documents. Because in Nigeria, it takes a minimum of 105 days, which is too much, to own a governor's consent. Meanwhile, in Ghana, that's just nearby, it should take you just 6 procedures to get a document in a week.
As far back as 2014, the population of Nigerians living in the slum and unplanned settlement was put at 50.2% by the World Bank. This meant they had no access to potable water, hygiene, and sanitation. However, the government on its part in 1991, when the country's housing deficit was still 7 million housing units, promulgated a national housing policy in order to provide shelters for Nigerians. By 1997, an urban development policy was initiated. This was followed by a new housing policy in 2012 that should see the country construct 1 million houses annually to augment the deficit. The increase in the housing deficit figure does not suggest that houses are not being built, except that some of these new builds are located in highbrow areas and they are left unoccupied as a result of either size, design, or high rentals. In 2017, the present administration commenced the construction of houses in 33 states for workers under its National Housing Scheme, which pilot was to deliver 2,736 units across the country. But it also appears the average civil servant is not carried along.
Maybe when they build it, they share it among their friends and colonies and brothers, but it hasn't got to the grassroots.
While many experts think a functional mortgage system is very important in plugging this gap, Abiodun Adeniji, an infrastructure expert, also thinks urban regeneration and collaboration will be very helpful.
What is supposed to be is a supply-led economy, whereby supply those infrastructure, let people connect to it.
Efforts may have been made by successive administration to plug this gap. Yet, 22 million housing deficit stares us in the face. At the moment, with housing construction put at about 100,000 units per annum, plugging the gap will take over 220 years, assuming current population figure remains constant. Chris Elams, Channels Television News.
It is the dream of every one of us to see that we have a home over our heads, but you will agree with me that having to do that has been an Herculean task because of the current crisis that we have in Nigeria, especially in the housing sector, which has been a hard nut to crack. If we consider the growing population, the rural urbanization that we continue to see, as well as the slow growth in the real estate sector, you will agree that the housing deficit in Nigeria will continue to grow. In fact, the World Bank has actually put the housing deficit in Nigeria at about 22 million, as we have heard or watched in that particular video. And furthermore, it was also estimated that we need about 700,000 units of houses to be built or constructed every year for us to be able to cover that gap, at least in the next 20 years. An investment of over 21 trillion naira will also be required. If you ask me, that is staggering. Despite the efforts of the government, of course, in the video we listened and we saw that the government has a national housing policy, the efforts of the private sector has also been trying to get all of us affordable housing. But with everything that we've seen, the indices that we've seen around still suggest that there's still many hurdles to be crossed for every one of us, or for that gap to be filled. It is that note that I welcome you to this session, and I say good afternoon to you. On behalf of every one of us at ARM, I want to welcome you to this enlightening and educative session. My name is Larry Droju. I work with the Business Development Unit at ARM Pensions. And today we'll just delve into the recently released guidelines by the National Pension Commission, which provides for RSA holders to be able to use part of their contribution to be able to assess that for equity contribution towards acquiring residential mortgage. So it's going to be a wonderful session. And I can see that many of us are prepped for this. We are also prepped for this. So if you are ready, I want you to just go to the chat area and just type, I am ready. If you want to put your name, you can say, my name is Larry. So you can say Larry is ready, or Shehu is ready, Mohammed is ready, Chinedu is ready. Type in there and let's see that you are really ready for this session, because I can tell you that it's going to be a wonderful session about the recently released guidelines. Thank you for those who have been doing that. Oh, Chooks, Magnus, Uzochukwu, sorry, I can't call everybody's names, but it's a lot of people right there. All right, so to get us started, where we're still getting ready, or some people are still trying to get ready, I would like to just call up the Managing Director of ARM Pensions right now, who is going to give us the opening remarks as we get started with this particular session. So I would invite Mr. Wale Odutola for his opening remarks. Yes, Wale.
Larry, thank you very much. Confirm that you can hear me.
Yes, very clear. Thank you.
All right, excellent. Good afternoon, ladies and gentlemen. And once again, we welcome you to this knowledge sharing session. Since it's been a month since the regulator, PENCOM, announced or issued the guidelines, the RSA mortgage guidelines. And in that period, we've been inundated with calls, emails, and visits by our clients and even non-clients seeking to get a better understanding of the guideline, but also clearly looking for how they can implement those guidelines, or those guidelines can be implemented by them in order for them to meet a very pressing need. As Larry said, there's a huge gap in home ownership in Nigeria, and one of the main stumbling blocks to that is just an inability of the average individual to save enough to acquire a home, either directly or save enough equity in order to secure a mortgage. It is the hope that this new guidelines will help bridge that gap. And it's been 6-7 years since we started having this conversation about home ownership using your pension as part of the equity for it. And I think without a doubt, it is long overdue. And one of the concerns that have been raised in the past is that if RSA holders are able to take out cash or take out equity for home ownership, then it will deplete the value of their retirement savings. And whilst this is true, the flip side to it is what is the point of having a huge balance of retirement savings, or having a balance of retirement savings, and then you're unable to acquire a home, or you don't have a home of your own. We at ARM see this as a big opportunity for our clients to own a home, build equity within that asset class, and hopefully see an appreciation in the value of that of the equity that they build up in that asset class, which ultimately forms hopefully should form a significant part of their retirement assets when they eventually retire. This session should last for about 60 minutes. It is our hope that by the end of the session, all of those that are with us in this session will have a better understanding of the guidelines, would also have a better understanding of how they can go about implementing those guidelines and acquiring a home of their own. Our own role really is to help midwife that whole process, because we really do want our clients to be homeowners and to enjoy the benefits of having a home of their own and seeing that asset also grow within their portfolio. I promise that this will be a session that we will go straight to the point and will not take too much of the time. But I'm hopeful that this will be a very useful session for us all, and it will be the first of a number of sessions that we will have as there's clarity on how the guidelines will be implemented. Thank you very much once again, ladies and gentlemen, and I wish you very, very good deliberations. Thank you.
Thank you so much, Wale, for that opening address. And with that context set already now, I think we are good to go right now. But just before we go into the technical session, I would just like to state a few things. Number one, like Wale had said, this is a conversation that we'll continue to have with you for you to enjoy that process, or to make this process to be very seamless for everyone that would go with us in this journey. So this conversation is not going to end here. So this is the first in the series that we'll be having. So definitely you should expect that in the coming weeks, we are also going to come back with updates and definite information as we get them from the commission, because we've actually been engaging the commission as soon as this circular or this guideline actually came out, and part of which also we've already built into the conversation that we'll be having today, and we'll continue to have that. So please share the link with your colleagues, your friends, your family, everyone. We're also live on YouTube. Perhaps you have people who can't connect via the Zoom. You can share if you go to our asset and resource management on YouTube, our handle, you can actually watch us live there right now, and you can also share the link with them. One of our officials will also drop the link on the chat there, and you can send that to them, even as we look forward to the conversations that we'll be having after today. That said, if you have any questions, I can see some of us already raising our hands. I'm sure you have so much to say. We're going to have time for that. We're going to even try to make things as fast as possible so that we can take as many questions as possible today. But if we're unable to touch on your questions today, never mind, not to worry. We are, like I mentioned, we're going to be having conversation very regularly, at least until we are sure that everybody has a good grasp of what this provision or this guideline is all about. So if we're unable to touch it here, it would also form inputs as to what we'll also be discussing in the next or subsequent conversations that we'll be having in the next series. So I just want us to sit back, relax, enjoy. If you have questions, go to the Q&A button is there for us. Some of us are already dropping our questions, so just keep it coming. Drop your questions there, and our panelists, which will be coming up later, they would take on those questions and deal with them. All right. So having said that, I would like to invite, okay, just before we do that, it's just important that we also get our polls on this particular question. So this is a poll that is going to come on our screen right now. The question is, which of the following will be most important to you when you're trying to choose a mortgage lender? And we're going to speak more on the mortgage lender, but mortgage lender are the people who give you the mortgage loan. So what will you be looking out for if you would like to choose anyone? Say the low interest rates, the payments, as long as they have customer service, that will be okay for you. The total closing cost, is it what you'll be looking at, or is it the rating of the bank or the institution itself, or is it safety and security? So let us know that. Just look to your screen right now. You have that poll running right now, and it's going to close in the next 5 seconds. So just ensure that you've been able to put in your own choice. Interesting answers so far. Okay, I will give 5 more seconds again. But I can see the numbers increasing. Many of us are still voting. I think about, let me check how many of us, about close to 70% of us have voted right now. Once we get to 80%, I think we can just end the poll. So if you have not voted, please go ahead and do that now. Interest rates, the monthly payments. Okay, so I can see some of us also typing it in the chat. Just use the poll so that we can collate it together in one in one platform. So if you can put it, just vote with the poll also. All right, I think at this point, all right, thank you so much. So the poll is going to end right now. Oh, somebody said they can't see the poll. I think you should be able to see it on your device. If it's not showing, maybe it's just something covering it. Apologies for that. So right now, the poll has ended, and I will just share if you look to your screen, you see the result of the poll, which clearly, unexpectedly, states that is interest rate. So interest rate is a key factor that you would consider, even I would consider, when I'm choosing a mortgage lender. And we'll be discussing further as we go on this. So thank you so much for participating in the poll. Without wasting further time, I would invite my colleague to take us into the conversation or the presentation that we have today. And this would just give us the highlights of the guidelines and how it works and how we come in. So I'll be inviting from our business development team of ARM Pensions, Uche and Ede, who would take us through the next presentation. Uche.
Thank you, Larry, for that wonderful introduction. And just like you said, the pool
Okay, apologies for that. Seems we lost Uche there. I mean, some of these things happened. This is a virtual session, and things like this usually happen. But not to worry. Ayo Deji.
Oh, Larry.
Right.
Okay.
So please go ahead. So we'll have Ayo go on with the presentation.
All right. Good afternoon, everyone. Good to have you here. Larry, I'm sure you are not, well, probably you are not as excited as I am with this new regulation. It's something a lot of us have actually been looking forward to, just like Wally said earlier. So in 2014, the regulator thought it wise to come up with a way to address the housing deficit within the country, as it were. And then basically, it was identified that equity contribution is actually a major challenge to housing finance in the country, as it were. So whilst we know that we have the pension pot growing on a month-on-month basis, we cannot just pull it out without a legal backing. So the Pension Reform Act, as revised in 2014, actually gave the required legal backing to the opportunity of using part of the retirement savings account as a payment of equity contribution for residential mortgages. So basically, this journey started 6 years ago. And that's about 8 years ago. And then now we are here. And then the most important thing is that we are moving forward. And then we are here to provide further information to how best you can actually take advantage of this regulation that was passed across about a month ago. So basically, the objective is just to provide easy access to equity finance, like I said, which is a major challenge. And then for RSA holders that are actually contributing into the pension, contributory pension scheme that we currently run in the country. And interestingly, this has also been extended to clients that are in the micro pension. So looking at the coverage and eligibility, you discover that you have employees who are in active service or those that are self-employed who can actually tap into this scheme. So you have a situation whereby every contributor or every RSA holder is expected to have completed the data recapture exercise, which allows your information to be uploaded on the ECRS portal. Now, basically, if you are registered prior 1st of June 2009, you would need to complete the data recapture exercise. But if your registration is post July 2009, you are actually you're already registered on that platform. So, and then you have the mortgage lenders that comes in as the bridge builder. So whilst you are able to access part of your pension pot as equity funding, the mortgage lenders actually drive that process to make available this the balance to make up the 100%. And then we also have the PFAs, we have the pension fund custodians. Those are just the principal institutions or key players that comes together to make this work. We also have the regulators. So you have the CBN that is actually the licensing body for the mortgage financial services within the country, and then PENCOM, who regulates our own activities in the pension industry. And then it is also expected that every mortgage lender would have met the requirements of PENCOM, even though they would have been licensed by CBN. They are also expected to meet some certain requirements that has to do with their compliance with pension activities in the country. The process is very simple. It's something that once you are an RSA holder and you have contributed for a minimum of 60 months. So whether you are contributing as a micro pension person whose contributions can actually come in on a weekly, daily, or monthly basis, the focus around this is that you are expected to you must have made contributions for nothing less than 60 months. And then for people who are in the formal sector, whose employers are actually remitting on their behalf, they should have remitted both legs. That's the employee part of the contribution, as well as the employer part of the contribution, for a minimum period that is not less than 60 months for you to be able to qualify for these. That's basically an interesting part of this. Now, this thing is the regulation covering this scheme is so interesting that married couples who are RSA holders can actually make joint applications. So if each one of them meeting the eligibility requirements as I've stated above, so you are contributing into the scheme. You have both employee and employer leg if you are a formal sector in the formal sector employment, and of course, if it's a micro pension self-employed person, you must have contributed for nothing less than 60 months. So irrespective of the frequency of contributing, either weekly or monthly, you must have contributed for 60 months if you are contributing as a micro pension contributor. So RSA holders who have access to 25% due to loss of job and that are not back in employment are actually not eligible to benefit this, because the idea is also looking at you being able to make payments on your mortgage at the end of the day. So the most important thing is that whoever is trying to access the mortgage is actually in an employment and must have contributed for a cumulative period of 60 months. And interestingly, the commission, looking at the way things are, thought it wise that we can actually tap into some other contributions that we have in our retirement savings account. So we have contributions like the contingent portion of the voluntary contributions that is available within the contributory pension scheme. You can actually tap into that in a situation whereby there's a shortfall between what you're trying to access as your retirement savings account balance and the equity contribution you're making. Based on the terms and condition of withdrawing from the VC. Now, also you have situation whereby your employer might have remitted things around your pre-act benefits or the NSITF that was actually moved into this scheme. The opportunity is also there to assess those contributions to augment the equity contribution where the 25% is actually short of complementing that equity contribution. So interestingly, people that have 3 years to retirement, less than 3 years to retirement, cannot actually be part of this because the focus is also still on the down payment of the mortgage at the end of the day. So we think it best that it's better that existing people who have 3 years to retirement are actually exempted from qualifying for this, and also existing retirees. So those who are currently retired can also not access this because they actually not any form of inflow or form of payment as we speak. So it's actually a seamless process. All you need to do is just to indicate that interest. But before I go into the process that it involves, let me just quickly clarify what equity contribution is actually not meant for. Now, equity contribution is not meant to refinance an existing mortgage. So one of the undaunting calls that we received over the last couple of weeks is around people that have some sort of existing mortgages trying to refinance them. No, this equity contribution for mortgage would not serve that purpose. So this has to be for a new mortgage arrangement, and then it will not serve to refinance an existing mortgage. It is not to serve as an outright purchase of a property. So what this means is that where your RSA, the RSA part you're taking for the equity payment can actually pay up 100% the value of the property. This will not serve that purpose. So the part of the RSA you're taking should serve basically the equity part of that mortgage that is being accessed. It is not to purchase land. So we don't want a situation whereby the equity contribution being accessed is now used to purchase land, and then the person cannot move forward as in to eventually put the property together. And it is also not for carcass building. It is actually for a ready to move in accommodation. So it is not for uncompleted building or carcass as the case may be. It is also not meant to fund commercial property. So we've also had these are also inquiries that we receive from people that feels like, okay, let me just access, I don't have so much money that would help me put a residential building together. Let me just access something for a shop so that I can earn from that shop and all that. No, the purpose of this equity contribution is also not for commercial property. It is simply for residential, just as it is stated. You are simply to access it for completed residential property that is ready for occupation. So typical mortgage arrangements looks more like there's the RSA holder goes to a mortgage lender to access a mortgage loan, and then that must be after he or she must have also spoken to a property owner who is also willing to sell, at which point they now need to check how much the property is vis-a-vis what the equity contribution is. Then the RSA holder then analyze what he or she has in the retirement savings account, and then see how much to the limit of 25%, because equity contribution is actually up to the ceiling of 25%, because you might actually have some equity contributions that are less than 25% of your retirement savings account balance. So once that is analyzed, then the arrangement is consolidated. Once the PFA sends for request for approval after initial validation of the records, and then eventual payment or transfer is made to the mortgage lender on behalf of the RSA holder. Now, so to discuss further into what the process flow looks like, just like I said, the RSA holder would visit a property owner and to identify or to choose a property. Then he moves from there, he goes to the mortgage lender. Once he has identified the property that he or she likes, he goes to a mortgage lender and then present the offer letter. The mortgage lender is also expected to carry out due diligence by validating the authenticity of the property. And then he or she also gives an offer letter to the RSA holder with the intent of funding or financing the mortgage loan itself. Now, once that is concluded, the RSA holder will then visit the PFA, where he would request for his retirement savings account statement. Now, the PFA on their part would make the statement available after validating that the pension contributions in the account, and they would sign off on that document. Thereafter, the mortgage, the RSA holder would go back to the mortgage lender, and then the mortgage lender verifies that 25% of the applicant's RSA balance can actually fund the equity contribution. Where the 25% of the RSA holder can't form the equity contribution, the shortfall would be made available by the RSA holder before the PFA can transfer or process the application to transfer 25% of the RSA contribution. But in this instance too, the RSA holder, like I said earlier, has the opportunity to tap into the VC, that's the voluntary contribution he or she must have made over the year, the contingent part of that, to augment the shortfall. Or if such an RSA holder has NSITF, that's the contributions from the defunct National Social Insurance Trust Fund that are being moved into this contributory pension scheme, he can as well tap into that to augment the shortfall. Or where the employer has remitted anything that's the pre-scheme, those are contributions or schemes that were actually in existence before the commencement of the contributory pension scheme, whose funds were actually moved into the RSA holders' RSA upon opening the RSA in this scheme. You can all as well tap into that to augment the shortfall of the contribution. So basically, once that 25% or the equity contribution has been catered for, or is sufficient, so to say, the PFA would then process the request to the National Pension Commission to enable them pay the 25% contribution to the RSA mortgage lender on behalf of it will be paid to the mortgage lender on behalf of the RSA contributor. But before that is done, we still carry out some level of due diligence to confirm that the property is still available, the mortgage lender would actually issue us an authority to go ahead and process payments. And after which we receive same, we will process payment through our custodian. And then thereafter, the mortgage lender is also to acknowledge receipt of funds on behalf of the contributor. And then at which point the mortgage lender, the property owner, and the RSA holder will then do what is called like a closeout meeting, at which point documents referencing the said property will be signed off, and then documentation handed over to the RSA holder. And such an RSA holder can actually proudly move into the ready house as good as the next day. So, which basically is what this is trying to address. And then at this point, we'll be glad to take questions or further discussions on this. Thank you very much, Larry.
Thank you very much, Ayo. That was a wonderful walkthrough. And I mean, as we were talking about, I have my own questions. And as if you're, anyway, you were presenting, there were so many questions that have been coming in. And I mean, I just know that it's going to be a wonderful session. So thank you again for that walkthrough. I mean, without wasting further time. Okay, did you say something?
Yeah, I said it's actually exciting. It's something that a lot of people are looking forward to.
Exactly. So right now, we can't wait any further. I think we should just go right into the conversation again. So I'll be calling up some other colleagues of ours who would also join Ayodeji, who we already met. I also introduced them. So by the way, okay, I think Ayo just came in as a emergency replacement for Uchenna. Uchenna, are you back? Okay, while we're waiting for Uchenna, Ayodeji works with our benefits administration team. He's one of the team leads there. We also have our compliance officer in the person of Shola Akinola, who would also join this conversation at this time. I mean, just to discuss around all of this that Ayodeji has taken us through. There are some talking points, in fact, many talking points. If we even check the questions, of course, we know that there are so many questions that this is popping up in our hearts, and we just want to deal with some of them. We can't deal with all right now because of time, because we know that we can't keep you here for the whole day. So I will just dive right into it. I have my own questions. I mean, just before we go, maybe one or two, then we go to the question and answer. So please, everyone that has been asking their questions in the chat, we just want to crave your indulgence. If you don't mind, you can just help us transfer those questions to the Q&A button or panel. That will help for easy collation, so that some of our officials that are also on that platform can answer some of those questions that we are unable to get to because of time. So they'll be able to track it better there. So if you don't mind, you can take those questions to the Q&A rather than ask them in the chat. So thank you as you do that. So Shola, let me come to you at this point. Ayo has taken us said so many things, and so the question is, I'm ready. I just want to go ahead right now. What am I supposed to do? What are the documents? Let me know so that I know that I can just access this immediately. So how can I go ahead? What's the next steps for me? After I've known everything that the whole thing is all about, can I start? What are the things that I need to bring along if I want to start? Yes, Shola.
Thank you very much, Larry, and good afternoon, everyone. It's an interesting conversation, and it's good to be available and to have you join us to discuss this all-important topic. Well, what you need to assess first is offer letter for the property that you are interested in. You know, when Ayodeji was presenting, he made us understand that this is for equity contribution for a completed residential mortgage. So it's not, it's a mortgage, is an apartment that is ready to occupy for occupation. So what you need is an offer letter from the property owner, and then, of course, you engage your primary mortgage bank for financing. Once you have been able to get an offer letter from them as well, so meaning you have 2 offer letters, then you approach your PFA to confirm the allowable maximum that you can use to assess this equity contribution based on the size of your RSA. Once you have that, and of course you get back to the primary mortgage institution, which will now first confirm the genuineness of the property and of course get the valuation for the property. Once those T's have been crossed and every I dotted, then you can come back to the PFA and submit a formal withdrawal letter. The mortgage institution can electronically forward your documents to the PFA, so that by the time you get there, everything will just move smoothly. And once we have that, we are ready to go. Your request will be forwarded to the regulator for approval. And once we have the approval, then we are good to go. Thank you.
Right. Thank you so much, Shola, for that. So at least you've been able to arm some of us with the information that we need to then get started. So just one more question. Then we go to those critical questions that our clients have been asking, or maybe I should come to Ayodeji at this point. So you mentioned the mortgage lenders earlier on. So who are these mortgage lenders? Are they commercial banks? I can approach any bank, or I mean, who are they exactly, so that I know exactly where I'm to go to? Or Shola has already told us how I said I'm ready. Has told me what to bring, so I need to go to a mortgage lender. Who are those, and where are they? Are they just anyone that I can just walk into? Yes, Ayo.
Okay. Yeah. Thank you, Larry. So mortgage lenders are basically institutions licensed by CBN to provide residential mortgages. So basically, they must have met the minimum capital requirement as provided or prescribed by the CBN from time to time. They are also expected to be in good financial standing with the CBN. And then for the pension industry standard, that's as stated by PENCOM, they would have a valid pension clearance certificate. That means they are actually CPS compliant, and then they also comply with every provision of the Pension Reform Act. So basically, these are financial institutions that the Central Bank of Nigeria must have licensed to carry out functions around mortgage lending, and at the same time, they must have also complied with those standards as stipulated in the Pension Reform Act. And then maybe to help our audience, list or names of these mortgage lenders would also be made available on our website and various channels. And of course, also available at the commissions, that's the National Pension Commission's website, as well as CBN. But of course, easily they can access this information from the ARM website, as it were.
All right, thank you very much, Ayo, for that. So, I mean, let's now go to the nitty-gritties. I mean, I don't even know where to start from. So many questions, but we'll start from somewhere. Now, so the first question I have here, say, good afternoon, sir. Please, I would like to know how I can get a mortgage, considering the fact that my deposit till date is not enough to buy a house of my own. So let me throw that to Shola. I think it's just a simple answer. Said, how can I get a mortgage, considering the fact that my deposit till date? I'm sure by deposit, maybe the person is talking about the RSA balance. It's not enough to buy a house of my own, right?
Well, thank you, Larry. Well, the part of during the presentation, I clearly identify what this equity contribution is not supposed to do. So you're not using the equity contribution to buy a house. It is for you to support your, the best word is to confirm your commitment to the primary mortgage institution of your ability and willingness to assess the mortgage that will buy the house. So, and that's why the regulation is such that you can use a maximum of 25% of what you have saved in your RSA. So if I can understand you correctly, if what you're saying is that your RSA is not big enough, then I would recommend that you try and save more so that you can probably have a value to get a home of your choice in any location in Nigeria.
All right, thank you very much for that response. The next question that I have here says, I am interested, there are two questions, but they are similar. So I expect that the answers will be similar. So one says that I am interested in building on my own. What arrangement is in place for construction? That is, I want to be involved in building my own. So the next one that is, I think is related to it is that, so this person says, an aspect that has been yearning for a clear response for me, and that's why I'm even taking this question, because this is a part of the feedback that we receive for some clients. So can there be a drawdown from the RSA to finance or buy a property that is at a carcass or skeletal stage with the purpose of utilizing the funds to then complete the building? So I think you can just take the two together. So maybe Ayo can help us to respond to that. One is that, can I just build on my own, get the funds to build on my own, or the house is already at a skeletal stage, or or in the normal balance, I just did the foundation, I want to complete it, or things like that. So can I then get the funds to then complete the house?
Okay, thank you, Larry. And then for the person that has the question, so the bottom line is that this is for a mortgage arrangement, just like Shola mentioned a while ago. You are to get, so the value of the property, let's assume it is 100%. And if I have to come down to Naira and Kobo, let's say it is 30 million. So what we are saying is that the equity part that shows that you are committed to that property and you have the capability, you can actually fund it from your retirement savings account, subject to a limit of 25%. Now, where you don't have enough in your RSA account to make up the equity funding, you can access other contributions that is actually different from your employee and employer contributions that comes in on a monthly basis. And then for the people in the private employment or self-employed, they can actually access the contingent part of their contributions. Now, for the person who is asking if he's actually interested in building his own house, as in he wants to be part of the everyday 1 block, 2 block, 3 blocks as on a daily basis, this is not really the place to look for, because what you are accessing here is a ready house, a ready apartment. You're actually doing something to move you out of tenancy like 2 months' time or a month's time, as long as you are able to provide the necessary documentation, and your RSA or whatever funding you are providing is sufficient enough to provide the down payment that would make you own the property. Now, you also have, where the mortgage lender comes in, is that to make up the difference between the full payment and the equity funding, the mortgage lender that's the bridge. They are bridging that gap for us, so that you are able to take ownership of the property, and then you are now paying down on your mortgage with the mortgage lender. So, so basically, this is for a ready apartment, not carcass, not a situation whereby I want to see the bricklayer. I want to see that they're actually mixing the cement as expected, or the blocks they are using are as strong as I expected, and all that. So this may not be the place to look out for, but probably to further assure the person, everything around this is going to be standard. The CBN, the mortgage lender would not even put their money down for a property that they think probably the property owners are fraudsters and all that. So that's why we have processes. There are validation checks at every point in time to ensure that, okay, these are genuine and authentic properties. I hope that answers the question.
Yes. Thank you so much, Ayo. Before I go back to the questions that have been typed also, I would just like to so many people have been raising their hands, so I think we should give them that benefit of asking their questions. So in the order in which those hands were raised, so sorry if I call your name, is based on how I'm seeing it on the Zoom platform as to who raised the hand first. So I will call on Olaoluwa Omilabu. Your hands has been raised for a while. You are enabled to talk right now, so just unmute yourself and ask your question if you have one, or if it was by error, maybe we'll just move to the next person. Olaoluwa Omilabu. Okay, perhaps that was just raised in error. So I'll move to the next person. Victor Megafu. You are able to speak now, so just unmute yourself and ask. Victor Megafu. Okay, what about Godwin Okewu Omeje?
Good afternoon, sir.
Yes, good afternoon, sir. You're welcome, sir.
Thank you so much. I've listened to all the presentations, the requirements and all that, but I'm a bit disappointed because this is what we have been waiting for since 2014 when the PRA was passed. And in between 2014 and now, a lot of water has gone under the bridge.
Right.
Yes. So I don't expect this kind of stringent requirement. For instance, let me give you an instance. In 2019, I live and work in Abuja, by the way. In 2019, I approached a developer. I bought a property. I went to First Trust Mortgage Bank. I dropped my equity. The equity itself, I had to go through a lot of stress to raise that money. And then Federal Trust Mortgage Bank now brought the mortgage component of it. And I have that property. Monthly, I'm remitting. By 2020, I bought this property in Post Army Housing Estate in Kurudu. When the traffic became so much, I said, no, I cannot continue. I had to now come to town in Wuye, in the heart of Abuja, to get a 3-bedroom block of flat because I was waking up 4 a.m. every morning. This 3-bedroom block of flat, I bought for 27 million. And then I approached commercial bank and they gave me a loan at 12% interest because of the sector I work in. And then I'm paying this mortgage at 2 points. These loans are 2 points. So what I expect PENCOM and PFAs to do is that for people who have gone, those properties I bought in 2019 and 2020 have tripled the price. So if I've waited, the property I bought in Wuye for 27 million is selling for 65, 70 as of today. So I don't see how this is helping, workers, or, it's as if the whole thing is rigged against us even from the beginning. But I understand that the PFA will always claim that they are working in line with the guideline released by PENCOM, which is fine. I think PENCOM is approachable. I will personally take this matter up to my union and they will make a case with PENCOM over this matter because I don't think it is fair. I don't think it is fair. I don't see how this is helping people to own houses. So what I expected is that, okay, PENCOM can ask me, bring the title, bring the evidence of payment of these 2 properties you have acquired. Let's give you 25% to cushion the effect, the loads on you. And then you are
Yes.
telling me that it cannot be used for refinancing. So what is the essence to start
Okay,
with?
sir.
So if I were to wait for the PRA implementation and PENCON, I will never own a house. That's the truth of the matter. And then I thank God for his grace, but I also sympathize with those who are not in my position to find their ways around this issue the way I have done. It's quite unfortunate and heart-rendering.
Thank you. Thank you so much, Mr. Godwin. I mean, I can see that you spoke from the heart. And I also saw some people also typing that you actually spoke their mind. So thank you so much for raising that concern. And I can tell you that, yes, sir. And I can tell you that is a concern that that we've also received, and we have actually engaged PENCOM on some of these things just to get. I don't know, Shola, if you want to throw more light on the conversations we'll be having with the commission and where we see this. I mean, it's a great concern that Mr. Godwin has said.
Thank you, Larry, and thank you, Mr. Godwin. Your points are valid, and we all know that we are in a very wonderful economy. And but you see, where we are coming from and where we are going, it's what forms and shapes the way some of these policies are being crafted. But like you rightly observe, or like I need to let you know, this is the first step. Obviously, we will get to where you think we should get to, but at least this is a step better than where we were 10 years ago. But I think I need to remind us that this account in the first place, it's called retirement savings account. It's actually created to ensure that we have a wonderful retirement life. So it's because other sectors of the economy seems not to be working. That's why pension is we are trying to use pension to solve every problem. And PENCOM may not be able to solve all problems for us to be realistic and be truthful to ourselves. But I believe that the regulators that we have, they are listening and they are looking at the ways that we can get things better. The way we are now is that this is the starting point. Let us start now. Let's see how we're able to use pension fund to stimulate the mortgage industry. Let's see how the ripple effect that will have on the economy. Once there is significant progress, then we can open up the process more to accommodate as many interests as possible. So your points are valid, but it's a journey that we are currently just starting.
Yeah, I've sent it to.
All right.
Thank you.
Thank you so much, Shola, for that question. So let me take one more from those that are raising hands, and we'll go back to the ones that have been sent in the Q&A button. So let me call on Stephen Sagu. Stephen Sagu, you've been enabled to speak now, so you can go ahead. Stephen Sagu. Okay, let's go to Gabriel Eze. Gabriel Eze?
Yes, I'm here. Good evening,
yes,
everyone.
go ahead, sir. Yes.
I think all the questions in the Q&A has been answered except my own. That's why I raised my hand.
Okay, sir.
The first one is in the slides that you presented, that your colleague presented. There was this slide that has lists of eligibility criteria, and it says something like 60-month cumulative something. And then in bracket, it says not 60 lines of transaction. So I need clarification of what you mean by not 60 lines of transaction. Is it like consistent 60 months contribution? Or if in some cases, which is common, organizations can miss contribution, but then they were able to meet up a cumulative contribution equals 60 months. I don't know if you get my question. The second one is on because you mentioned something like people who are approaching retirement year. So my question is, if as at that time you have significant savings, you should be able to qualify. I mean, there should be like a filter. If you're retiring and you don't have enough money, then you can fall off the filter. But if you have significant savings, you should be able to also access it. So those are my two questions. Thank you.
Okay, thank you so much, Mr. Gabriel. So the very first one, let me answer the first one, and then I'll throw the second one to either Shola or Ayo. So for the first one, so it says where it's saying not 60 lines, is just to say that, okay, contribution has come in, whether they are cumulative in the sense that January to December has already been accounted for. I just have 60 remittances, regardless of the months in which they've come in, forgetting the fact that maybe there are some months that are missing in between. So that's exactly what that was speaking to. That is the contributions actually account for. So let's even say January to December, for instance. So there's January to December for each of those years, and we can see that all those months have already come into your account. And not that, okay, maybe it's January to June in one year, then May to October in another year, and everything counted together is 60 lines of contribution. No, all those contributions must actually, all those months from the first year of that preceding 5 years must actually be existing in your accounts. So that's the explanation for that. So I would just have Shola respond to the second part of the question.
Thank you, Larry. In addition to what you have said, I think I need to explain further. You see, for those of us in formal sector, remittances most times is once in a month. So it's easier to determine the 60 months. But for those of us or clients that are in the informal sector, they have opportunity of making daily and weekly remittances. So that is where the 60, that's why we had to distinguish between 60 months and 60 lines of transaction. Because for those in the informal sector, you can have 60 lines of transaction within 1 month if you make remittances every other day, because the regulation actually allows you to do that. But that won't translate to mean that you have been in the scheme for the minimum number of years, which is 5 years, which is supposed to accommodate both employer and employee contribution. So that's why that provision is there. So it's not really about the lines of transaction, but the number of years that you have been able to make contributions into the system. That's that. So the second question, Larry, what's the question again? Remind me.
Those who are about to retire.
Okay. You know that this provision is actually for equity contribution towards the mortgage. So it is assumed that if you have less than 3 years to retire, you are going to retire on your retirement savings account. And if you assess part of it as the equity contribution, you are being exposed to another facility, which will negatively impact your retirement life if you have to use your retirement savings to service a loan. So it's just to ensure that we have quality retirement life. That's why retirees currently on CPS are not eligible, or anybody that has less than 3 years to retire. That's why they are not eligible, so that they don't use their retirement savings to service loan, and of course, which will negatively impact their retirement life. The regulator wants us to have quality retirement life after having served the nation for 35 years.
All right, thank you. Thank you so much for that. So I will go to the next question here. So Ayo, I will come to you right now. So this question is, how can one be sure that the mortgage lender has met PENCOM requirements? I know you touched a bit on it when you were talking about the mortgage lenders earlier on too, but can you just, 10 seconds or so? So how would somebody know that this mortgage lender has been cleared by PENCOM or has met the requirements? Yeah.
Okay, yeah, thank you, Larry. So basically, these institutions are still being supervised by a particular regulator. So you have the CBN that reviews their books from time to time. So, and then they issue their, they keep revalidating their license. Once they meet all the requirements, they are in good financial standing and what have you. And then for the commission too, we will also ensure, I mean, the National Pension Commission would also ensure that they only confirm those mortgage lenders that are actually complying with the Pension Reform Act and other requirements as stated in the guidelines. So, like I said earlier, the information around qualified mortgage lenders or eligible mortgage lenders would be available on our website. And so participants can from time to time check. At the same time, it will also be available on the Commission's website. Does that help?
Yes, thank you. Thank you so much. We'll just take some few more questions just before we go. I will just ask this question I'll throw it to Shola. So somebody is asking that I think we've also touched on it, but just to emphasize, to say that if my spouse is in a different PFA, I am in ARM, is it possible to benefit?
Definitely. The provision is there for you, but both of you will have to fulfill the eligibility criteria. That is, the wife with your PFA, you must have had not less than 60 months cumulative employer-employee contribution. And of course, the husband to your spouse too in his PFA too must have qualified. And of course, both of you must be in active service. So with the two individual eligibility criteria completely in order, you can both submit a joint application to your respective PFAs. Now, you tick on the application form type, you tick a joint application, but you will submit your own application to ARM, and of course your spouse will submit his or her own application to PFA as well, because payments will come from your respective RSAs. So our body will go to the same mortgage institution since you have a joint application. Yes, you can.
All right, thank you so much. I think this question, we must answer it before we go. And maybe I should come to you, Ayo, also. Can one still access another 25% if out of job for 6 months?
Oh, so yes, that provision is there within the regulation. And then it's just, so you notice that when I was presenting, I mentioned that for anybody who is applying, the focus is that the person is in employment and would still be in employment for a period of 3 years and above. So if there's an existing ongoing mortgage and then there's the issue of loss of job sometimes down the line, I think that's actually coming after this has been effected, and the expectation also is that the person would get into some other employment, or there would be discussion between the mortgage lender and such a person around refinancing and what have you within the mortgage lending terms. But yeah, that opportunity is there for such.
All right. I will just take one more question, even as we wind down right now. And this question is that, okay, sorry, I think I missed that off. It said, how can those who are already on monthly pension benefits or participate in the mortgage scheme? And I think that speaks to what Shola had explained earlier. So we can take that has been answered. Let me take another one that we have not really touched. Okay, you said, please, do you have a minimum amount one needs to remit to access this service? Is there a minimum amount, Shola, that one should have in your balance for you to be able to access this?
Well, I think I would say the minimum amount is make sure that your RSA is sizable enough, because what determines what you assess, remember, is that is the value of property that you have in mind and what you have saved. You can only use what you have saved as equity contribution. So if you want to say what's the minimum amount, the question is, what kind of accommodation are you looking at? What is the likely cost? If you have that in mind, then you will know what. So because for somebody that wants to build a house in my village, it's not going to be. I wouldn't need as much money as if I wanted. I'm trying to buy a house in Lekki, because of the valuation in both areas. So it's a function of what is your target residential mortgage that you want.
Exactly. So at this point, we'll encourage everybody, even if you think that the amount is not so sizable right now, you can take advantage of the additional voluntary contribution for you to actually shore up your balance, such that by the time maybe you can give yourself a target that maybe in the next 2 years you want to come back to this, so have access to this, and perhaps maybe at that time some other relaxation will have also come in terms of the rules and the principles, or how you can assess it. So you can give yourself that time, and from now start making voluntary contributions to then build your the base from which you can actually assess the amount from your retirement savings account. So thank you very much, everyone. Like it has come out clear that, and that's why we have also come out bold to tell you that we are having that conversation with the commission, and we'll continue to have that conversation, right? And this is also going to form the next part of the conversation that we're going to be having in this series. Like I mentioned, this is not the first. This is not going to be this is not going to be the last. We're also going to come back. All the questions that have been asked, as I mentioned, we're going to deal with them. The one that we don't have answers from the commission yet, we are still having that engagement, and we'll continue to have that engagement. So look out and watch out for the next series that we're going to have in this conversation. And I can tell you it's going to be it's going to be better, it's going to be bigger. We'll probably also have some industry experts in the real estate sector also coming to tell us what's happening right there, and what you need maybe in terms of the mortgage lenders, the property developers. I mean, people who are on the field, these are the people you are going to engage anyway. So we're also planning to bring them on board this conversation to share exactly what you will meet on the field, so that when you are going, you already have all the information that you will need, and you can actually tackle any obstacle that you might have. And even in the midst of that, ARM is going to be there with you all along, because we are ready to help you, to handhold you through that process. And that's why we're having this conversation. So please, we want to keep in touch with you, and we hope that you'll also keep in touch with us. And that's why we are also letting you know that you can continue to engage with us. We have on the screen right now how you can actually engage with us. That is via, you can contact your you can contact your relationship officer via, I'm sure you already have their details, but if perhaps maybe you can't recall, you can chat us on WhatsApp line. That is what we have on the screen right now, or send us an email at info@armpension.com. The number for the WhatsApp is 0812-185-9148. Or you can contact any of the numbers that you have on the screen for our regions, across all our regions. But I would like to also state that before we go, let me just do a recap of what we are taking away from here. Number one is that you can just before that, there is this person that we need to have speak, Adewale. Okay, Mr. Adewale, are you there? Mr. Adewale, can you speak now? Are you able to speak?
Okay, yeah, all right. Thank you so much.
All right.
Okay, all right. Thank you for this opportunity. I know some of my questions have been answered, but
Okay,
just one or two. One is to ask that you might not have it now, but one of the things that we'll appreciate if you can get credible mortgage lenders that you feel comfortable working with. I think we'll appreciate if we know, because we'll be more comfortable knowing well that you will have covered some risk that we should be exposed to. Yeah, we're not going to transfer the risks to you, but we believe that you can give us some of this list and you can still ask us to check for us to choose. That's one. Two is the fact that in this day and age where customers' data are very, very important, you have our data. I've joined ARM since 2005 when it started, and I've been with ARM all through. So you can use our data in terms of our balances and everything to do some kind of profiling for us to say, okay, Mr. Adewale, this is what your 25% looks like. These are the available homes or mortgages for you. Maybe you want to ask us ahead, which area do I really want? Maybe I say Lagos or Abuja and say, oh, these are some of the houses that we found for you. If you're interested in this, you can talk to this person, you know, all those kind of things. I will appreciate, even if, which I don't expect that you should put a cost to it, but if it's something that is taking you so much and you say you put a little amount there to say you can pay for offering these services, or you also make it a value adding services to us. I mean, for some of us that have been with you, how many years now? I'll be going to 20 years very soon. We should be able to get some kind of value from this relationship. The mere fact that we did not go to other people, even when things are not working properly, but we thank God that things are working properly with what we want now. So thank you so much. This will be my questions or my contribution at this moment. Thanks.
Right. Thank you so much for that, Mr. Adewale. I mean, like I mentioned earlier, conversations are still ongoing, and that's why I actually ask that you look forward to that next session. It will be is going to be, because we're having conversations, just like you said at the start of your comments. So we are having engagement, and we're going to be revealing that as we as those things are formalized. We'll also be telling you more as we continue these conversations. That's on one hand. On the other hand is that we're also engaging the Commission to see how this will also pan out, because we have your interests at heart. Wale mentioned something earlier that for us in ARM, that's the reason we are even coming out to you openly like this, to let you know that this is what we want to help you with, and we are ready to walk that journey with you to ensure that you get the best, not only the best, and to also make the process very seamless for you. So just before we go, what we are able to establish here is that as long as you meet those eligibility criteria, you can actually have access to your account for the purpose of
your account.
Yes, part of your account to access 25% on. To access 25% at most.
No, part of the account to serve as your equity contribution.
As equity contribution, yes. So that has been clear. Then the second part is that we've also tried to, and I hope that comes out clear to us. So many misconceptions around the equity contribution. What equity contribution is not. I think that's another thing that we've been able to take away from here. People say, okay, can I use it to build my house from foundation? I already have the skeleton or the carcass which I want to. So we've been able to establish what equity contribution is not, and we hope that you can take that information as we discuss. Well, right now, Shola has also said these are things that will continue to push back, and there will be refinements as we give those feedback. And that's why we're also taking all of this back to the Commission. This is what people are saying, this is what they think, and they continue to make that adjustment even as we go on. If you even take the Pension Reform Act itself, it has been amended, and it is based on feedback that we've been receiving. So that will continue to happen. As we get feedback, the Commission will also go back and make those adjustments as necessary. So that is essentially what is what we are taking away. So please look out for the next session. We are going to be communicating with you. It's been an absolute an enlightening session that we've had today, and I'm sure that if this has also been a great session for you, just put a thumbs up. I would like to acknowledge Mr. Kehinde Buhari. I saw your comment earlier. Apologies, we were unable to take your question. There are so many questions. I mean, you can just, if you just have an idea of all the questions that I have here, over 200 questions. So we obviously cannot take all of them at this time. So we apologize that we were unable to take your question. However, this forms the input into what we'll be having in the next session or in the next series to this conversation. So thank you so much. We really and deeply appreciate your time here. And as we go, I just want to leave you with these words from George Moore. He's an author, and he says that a man travels the whole world in search of what he needs and returns home to find it. So we are working right now. That is the journey that we are in, but we are also one day going to go back home, where we now enjoy the fruits of our labor in our own home. That is the lesson and the takeaway that I want us to go away with today. It's been an amazing time. Thank you so much for your time, and we say good evening to you. Enjoy the rest of the day.
Thank you, everyone.
Thank you, our guests, our facilitators.
Thank you.
Life is a journey, they say, and the best journeys are never traveled alone. Whether it's starting that financial journey and needing stability, or needing the right direction for sound investments, at ARM, we are there for you through every phase of your life, even making the transfer of your wealth and assets totally seamless. And when you're ready to explore life after work, ARM doesn't just show you the way, we are right there with you. And if you're looking for an investment that doesn't just change your life, but touches the lives of many, then join us in building the community of the future.
Come! Let's face tomorrow together!
ARM, invested in your tomorrow.